I want to cover several concepts with you today, or several things, or several signals or signs that will lead you to know when it's time to lean on the long side. So the first thing is what I would call frequent no follow through red bars. This is the no follow through concept. Many of you have listened to me talk about the no follow through concept. When strong red bars experience little to no follow through, that's the key term. It's not zero follow through, even though I say no follow through. It's truly little to no follow through. So what I mean by that is when solid red bars, power red bars, you don't get another lower red. You might get a red like this, but it's that red is not lower. And the key, that no follow through red bar gets taken out. Now that's one scenario of a solid red bar that experienced no additional red after it that was lower and that eventually got its high taken out right there. When you start to see a series of these, when you start to see them, this scenario start to pick up in frequency, it's time to flip back to the long side. This is one of the key signs that you are at or near a bottom, because solid, powerful red bars have an 82% follow through rate. So 82% of the time, this bar is supposed to produce more red. When you start to see that statistic break down and you start to see that solid red bars are not following through anymore. In fact, solid red bars are stopping dead in their tracks and they're being taken out to the upside. That's your bottom. This doesn't have to be all by itself. So it can have a solid red bar before it. So this solid red bar had the follow through, but this second solid red bar did not have the follow through. That still counts. You've got to be careful about this scenario. Let me show you. Don't confuse this, okay? Let me show you. Solid red bar. And then you move up from there like this. Don't confuse that as the complete setup yet, because that could just be the dead cat bounce that leads to this. There are really two components to it. There's zero follow through or little to no follow through, and a taking out of the high having produced no follow through. So the two parts are required. You don't always have to take it out. As long as you take out most of it, it kind of still counts. The best ones obviously are if you've taken out the whole red top here. What do I mean about little to no follow through? That's important to understand too. So we have the no follow through. The little to no follow through is that you get a little one, a little slippage, but now you get it. That's why I always specifically say little to no follow through power bars. That's what I like to call them. Long name, but it's very descriptive. Little to no follow through power bars. This had a little bit of follow through, and that counts. That's okay. It doesn't really matter if from here there's no more follow through and you ultimately take out the high right there. This also does work in the reverse. Here is a solid red bar. And remember that's going to have an 82% chance of follow through. So that's why I often, if I'm shorting into solid red bars, I will dive into violent red bars knowing that more than 8 times out of every 10, I have money eventually, because 82, that's 8.2 times out of every 10 times, you're going to experience more downside. So we get this big fat red bar here. We get a secondary big red fat bar, and there's little to no follow through that proves that that was basically the bottom, at least for now. Now, it's a good question. Are there location specifics? Location is always valid. The further away you are from your key moving averages, the 20 and 200, the better the odds that it is truly the climactic bottom, right? So this red bar was near the 20, and this one gets far away from the 20, right? So the further you are away, the greater the odds that it is the bottom. Always remember that. Now look at this fat red bar. But see, it originated from the 20. So that doesn't qualify as the very, very best location. And this is why, in my opinion, this bounced a little bit, but didn't come anywhere near to canceling the bar out. And boom, there's your follow through. You had solid red bar here, little to no follow through, and boom, there's your takeout right there. And that's a pretty sizable move right there. That's a $2,000 move right there. It's big. This was the sign that a bottoming characteristic was starting to form. This was very significant for me when I saw this. And okay, we fell back hard, but it didn't really significantly go lower. So now I'm looking at that drop and I'm saying we're gaining distance. We're not going lower. This looks very bullish. Look at that. Now, in reality, this should have been the low. It's basically exactly the same. Sharp drop, move away. And if you look at that pattern, that's exactly this pattern. Drop, move away. And so a lot of times these bottoms end with a strong plunge, which is sort of like that last slamming of anyone with hope. But it is the no further. Why is this thing not moving further? There might be attempts, but why is this thing not moving further after such a slamming? And the takeout of the majority, it's best if the whole bar is taken out, which basically occurred here. But this move up, that bar went all the way up there. It pretty much went all the way, which gives you the view. Remember our percentages, right? So if you stay in the lower half, you're likely to make a new low. But if you get all the way up here, you're likely to not make a new low. As a result of that little to no follow through event here, you know what this move here is from that low? 36%. That's huge. 36% in a relatively short period of time. And guys, you should all know some of the key turning signs, right? Dual bottoming tail bars are very powerful turning signs. Double bottom tail bars, very powerful turning signs. This red bar had that low, and there's little to no follow through, and we take it out. Doesn't go tremendously far. It's still a decent move, but you start to see this happen. That red bar, no follow through, and eventually gets taken out. This fat red bar, no follow through, and eventually gets taken out. That fat red bar, no follow through, and eventually gets taken out. That fat red bar, no follow through, and eventually gets taken out. Like you start to see it over and over and over again. This is the bulls winning. This is the bulls stepping up. Do you guys see that? This is the bulls stepping up on collapses. Instead of the bulls disappearing on collapses because they think it's lower, they're stepping up on collapses. Solid red, a little wider there. No follow through. We know that as a bull 180, obviously. A bull 180 is one version of it. But remember, you can have this and then it goes, or it goes like that. The bull 180 is one version of it, but there are other versions. So it's a broader category than just a bull 180. we have the little to no follow through power red bar effect. The other effect is clearing events. In a bottoming scenario, you start to see a lot of stocks basically drop, fail to drop anymore, and go sideways, and then experience a clearing event somewhere away from the drop. When you start to see that become more prevalent, that start to show up in stocks more frequently, your market is bottoming. Even on a micro time frame, you start to see things like here's your drop and here's your sideways, and boom, there's your clearing. And you've got red power bar no follow through effect, and you've got the clearing effect. And those two things make up the most prevalent signs that you're bottoming. That's more of a climactic bottom. You climactic drop and bottom out. But the most prevalent ones I want you to focus on are the two that I just explained to you. That fat red bar, no follow through, red bar gets taken out. Whether it's taken out later or right away. But when you start to see fat red bars don't follow through anymore, solid red bars are not following through anymore. These reds are not following through. Do you understand? They're not following through. That's bullish. The reds can't gain momentum. Solid red can't gain momentum. Solid red can't gain momentum here. Solid red can't gain momentum here. Solid red can't gain momentum. And it just starts to show up all over the place. And those are signs of the market potentially turning to where, not that you ignore shorts now and go full-fledged long, it's just that you can now balance the two sides out again. Here is a solid green bar. Here's the scenario of little to no follow through, right? And boom. I want you to practice finding these scenarios where you say, that's a solid red bar, but it didn't follow through and the high got taken out. This was a solid red bar. It had one extra little follow through and then got its red taken out. Like, why is red now not following through and zipping? When you see that over and over, your market, you start to see that frequently, your market's changing. What makes bear markets so difficult to stay short? Because some novices think that, oh, in a bear market, you just make money by being short and you stay short the whole bear market. Well, that's easier said than done, because bear markets are notoriously known for violent surges back to the upside. And big ones, like for instance, you can have a 50% rebound of the entire bear, a 60% rebound of the entire bear, and the next move down moves to a new low. And so bear markets are more violent in that way than bull markets are. Bull markets are smoother, actually, but the bear markets are whippier and they are more violent than bull markets. And a large part of that is because of short covering. Solid red, little to no follow through, and boom. Solid red, no follow through, and boom. You just start to see these things over and over. Solid red, solid red, solid red, solid red. So just make sure that it's fairly solid that you're looking for. Compact, solid. They're the ones that have big, these should be following through to the downside, but they're not. It's your market is flipping. Here, solid red, no follow through, and clearing right after. Remember, the definition of a clearing elephant bar is 5 bars or more. It's clearing out 1, 2, 3, 4, 5 or more. That's all you need. We got the 5. That qualifies as a clearing. And that clearing is right after. So you have both in the same play. That clearing is right after a little to no follow through red bar event. This fat red bar is the little to no follow through. It's just one extra little one, and that marks the low. When you start to add position to this, if you add position to anything, it becomes more powerful, right? So if you get a fat red bar, no follow through, take out the high at the 200, I mean, come on, or at a prior low, or way below all the moving averages, the position or location only adds, if it's a good position or good location, it adds extra credence to the scenario. Here's your clearing event on the negative side, on the bearish side. This has been the easiest market to make money in, guys, on the short side. It has been the easiest market to make money in. We're getting some turning characteristics now, but for the most part, it was very, very easy. Solid red, a little follow through, and that's it. Solid red, no follow through, and that's it. Solid red, no follow through, clearing. So I want you to put this together like, every time you see a fat red bar that is not following through, there's no additional red, or if there is little and then it pops back up and it takes out the high of that fat bar, track it. I want you to go back in the past and find some of them, but I also want you to practice becoming aware of them as they're happening during your trading period. Fat red bar, no follow through, take out. Fat red bar, no follow through, take out. Here's the little to no follow through and take out. Here's your clearing. 1, 2, 3, 4, 5. It's all here, guys. It's all here. Fat red bar, little to no follow through, takeout play. The location makes it more powerful, and the clearing elephant bar away from the drop. See, that's the drop, and then you get the clearing. Yes, so Mahesh is saying green bars have good follow through in this phase. Yes, so when you start to see fat red bars fail on you to follow through with increasing regularity, that will mean that green fat bars so the ball's been passed to green bars, which are going to have good follow through. See, these green bars have good follow through because the red ones have stopped having follow through. Either one team's going to have the ball or the other team's going to have the ball. And all this game is, guys, is just determining which team has the ball. I mean, even here, look at this sharp drop here and no follow through. And then immediately comes the clearing. So the red one didn't follow through, but the green one did, telling you that, yeah, the ball's been passed from red to green. Psychologically, it's not very easy to play. Why? Because the fat red bar creates fear. That's what makes it not easy to take, because boom, like the fat red bar slams. But that slam, the way you should look at it is that slam is a fake if it gets taken out with little to no follow through. It means that it was fake. That's the way you should think about it. That was a shakeout. That was fake. That wasn't real. That is why it had little to no follow through, and now it's being eliminated. All right, take this, guys, and run with it. 2 things. Fat red bar, little to no follow through, takeout. Boom. Clearing green elephant bars, clearing 5 bars or more away from trouble. Boom.